What a day for technical analysis, traders. Welcome to our post-market recap. If you watched our pre-market analysis this morning, you saw us lay out a clear, bearish roadmap for the Nifty. And I have to say, the market played out almost exactly as we had anticipated. The Nifty didn't just close in the green at 25,916. It followed the script we discussed, step by step. In this video, we're going to do a victory lap, not to boast, but to reinforce how powerful trading with a plan and key levels can be. We'll break down exactly how our prediction matched the market's behavior and what it teaches us for tomorrow. Recapping our pre-market bearish call, let's rewind to this morning. Our thesis was built on two pillars. Pillar 1, the negative global cues. We highlighted that was down 1.57%, very negative. Asia was down, and crude was down 1.40%. We explicitly said this creates a defensive setup, and that the global winds are turning negative. This was the fundamental fuel for the bearish fire. Pillar 2, our key technical level. We repeatedly hammered home one critical number, S1 at 25,799. We called it the line in the sand, the critical battlefield, and stated that a break below it would be a major sell signal. Our combined call was flat to very negative, with a clear instruction to be defensive and watch for a break below 25,800. Now, let's see how the day actually played out. The day's action, a play-by-play of our prediction unfolding. The market opened flat to negative, just as we expected, and immediately faced selling pressure. The most beautiful part of today's move from a technical standpoint was the respect for our key levels. 8. Resistance held firm. We said any bounce would be sold into and that R1 at 25,949 would act as a strong selling. The Nifty tried to rally in the morning, but it was immediately rejected. It could not sustain above that level, proving our resistance analysis was correct. Though, the critical breakdown, the main event happened when the index broke and sustained below our crucial 25,800 level. This was the trigger we were waiting for. Just as we predicted, this breakdown accelerated the selling pressure, pushing the Nifty down to a low near 25,750, which is precisely between our predicted targets of S1, 25,799, and S2, 25,719. The price action was a textbook example of a breakdown following negative global cues. Our roadmap was right there on the chart for everyone to see. Key takeaways or lessons for traders. So, what are the key lessons from today? 8. The power of a plan. We didn't guess. We had a plan based on global data and technical levels. When the market followed the plan, we knew exactly what was happening and what was likely to come next. Though, levels over noise, amid all the market noise, focusing on that one critical level, 25,800, gave us a clear, unbiased signal for action. Team. Respect global cues. Today proved that when major global indices are selling off heavily, the Nifty rarely remains immune. It's a crucial factor in our pre-market analysis. For those who traded with this analysis, well done. For those who watched, I hope this demonstrates the value of having a structured approach. A quick look ahead to tomorrow. Now, what does this mean for tomorrow? Today's close below 25,900 and the confirmed break of key support shifts the momentum in favor of the bears. The immediate supports to watch now are S2 at 25,719 and S3 at 25,619. For any recovery to gain credibility, the bulls will first need to reclaim the 25,800 to 25,850 zone, which was today's breakdown point and will now act as resistance. We'll do a full pre-market analysis tomorrow morning with updated levels, but the burden of proof is now on the bulls to stage a recovery. That's a wrap on a day where planning and execution aligned perfectly. If you enjoyed this precise analysis and want to be prepared for tomorrow, make sure you like this video, subscribe to the channel, and hit the bell icon so you don't miss our next update. Let me know in the comments, did you follow our analysis today? How was your trading?